That's the expectation coming in. So that's point number one. Point number two is the competition that's coming in, and there is new competition coming in a strong fashion. And therefore, there will be pressure with regard to margins as well as profitability. They're pushing back profitability. They've toned down with regard to the expectations, EBITDA expectations from the Blinkit business of Zomato for FY26 and 27. And both of those factors leading to tweaks in Blinkit's valuation per se, which is what is impacting the stock valuation that they are ascribing to Zomato as well. So that's point number two. Aggressive moves by incumbents and entry of new players. Both of those factors will play out as competition ramps up. There is a threat to medium-term profitability, especially where Blinkit is concerned due to this competition. And they are worried on the rise of a quick commerce competition. So all of those three lines which they've written out point to the fact that the competition is going up and why they need some bit of EBITDA normalization over the next 2 years, which will likely impact the EBITDA numbers. Last off, just with regard to the multiple itself, they've cut the target multiple by half for Blinkit to 6 times, which is what has led to the downgrade, 275 being the target price versus earlier 335, upside just about 1% now.
Thank you for that, Harsh. That's Zomato and Jeffrey's downgrade coming in on the stock. It did see pressure in trade yesterday itself. Some follow-on selling may not be ruled out on back of that brokerage call. Sunny, what is the word on Zomato? And then, of course, Kunal, I'll talk to you about the technicals as well. But you want to first go at this, Sunny, on Zomato? What do you do? Do you use this current opportunity as a buying trade or a long trade, or is it best avoided?
I would like to add on dips because of this volatility, and the reason being that despite of increasing competition on the quick commerce side, the growth opportunity is pretty robust for all the players. So I think the pie is pretty large, whether it is in quick commerce segment or on food delivery segment. So I think yes, with the recent entry of Flipkart, there has been an entry of a deep pocket player. But I believe again there is a space for everyone to grow. So I think I would be a buyer in both, in fact, Zomato and Swiggy on any correction during the month of January.
So you would buy Zomato and Swiggy on correction. Kunal Rambia also with us this morning, is founder of The Street. Kunal, I'm just wondering if you have any take on a Zomato.
Absolutely. We have been discussing about Zomato on our channel since quite a long time, right? Because the trend was absolutely positive. Now, if we just go back and check the historical data, on 2nd of August, the counter was up by around 12%, and from 240, it went up to as high as 280 kind of levels. Now, that 240 level was tested almost 3 times by the counter, and that support was taken and the counter kept making new high. As of now, it's trading near 264. As I've always been saying, the trending counters have to be bought in the correction itself. So keep this level of 240 in mind. If the Zomato remains above 240, it's absolutely comfortable adding on dip. Because of panic, we might get an opportunity to buy near that support. If the counter closes below 240, then this entire view of last 2 years, which is the trending view, might just come to an end. But till the time, it's a buy on dip counter.
It's a buy on dip counter on Zomato. I mean, Kunal, I'm just wondering whether, you're seeing any further upside to some of those stocks that moved yesterday on the back of this virus scare. So I just want to pull up a Metropolis, for example, and Apollo Hospital, for example. Do you think that you'll see some profit booking today, or would you want to buy any of these right now and are seeing a longer, more bullish trend?
So again, we have been following trend consistently since last 3.5-4 years. If I just look at Metropolis Lab, the rally started from precisely from December 2023, where the counter stopped its downtrend, sideways consolidation, and gave a first breakout, and that level was around 1700. And since then, we are onto it. It's been last 3 to 4 months. The counter is sideways consolidating, but it's holding on to the support levels of 1970. So for now, our trailing stop loss on the position is 1970. If the counter falls below 1970, it's a complete exit. But otherwise, I think this trend might just continue. There is no major selling volume. In fact, yesterday, we have seen a very good positive volume on the chart with the counter going up by around 2%. So I think this is the ongoing trend which might just continue. The positional target can be 2550 to 2600, and the stop on this is right now 1970. So with that, one can even keep on initiating a buy at this level.
Right. Kunal, we've also got earnings, tech earnings that kick off, and I think IT has been showing some signs of holding up, barring yesterday, of course. Anything in the tech pack that you would buy? A couple of brokerages as well had long trades, in LTI, Mindtree, case in point. TCS kicks off the earnings season. Would you be brave enough to initiate a fresh long ahead of earnings?
Certainly not, Samina. Again, we have been discussing about IT PEC per se in the past sessions also, right? Just look at Infosys. From 2nd September till now, this counter is failing to surpass 1980. There were 5 attempts done by the counter, but it was a failure, though it gave a closing for a day in between. But again, it slipped below that level itself. And yesterday's high was also 1975. Similar is the case with TCS. Just have a look at the levels of the historical times. It's not able to sustain near those 4,300 kind of levels, right? So though as of now, TCS has come down and it's near to the support, but I'll wait for some kind of consolidation before initiating a buy. The IT counters which are near all-time high, one needs to watch out for 52 weeks high on the charts. If that's clicked in, that's going to be the first breakout sign and one can think of initiating a buy. Otherwise, for now, I'm just away from the IT. I'm just waiting for some more signs of clarity.
Okay. We'll slip into a short break. Stay on. German viewers, stay on too. We'll be right back with the pre-open session.
My face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is not my face.
Welcome back. Just about a couple of minutes for the pre-open session to go. I'm going to quickly pull up your implied, just to take a look at whether we will have a sustained reversal of trend. It might be difficult the way the market's mood is going on today. Kunal, Rambia, I just want to talk about a few ideas that we need to look at, and I'm just wondering if there is anything in the Nifty bank and banking space, the BFSI space, that you want to look at more closely. And let's hone in on an HDFC specifically. The business updates were less than exciting, to be fair, but it did not for the first half of the day crack to that extent. Do you think that HDFC Bank could be the dark horse in this season? And is that something that you would look at?
Yeah, specifically on HDFC Bank, the observation was that it gave a first breakout, all-time high breakout, that's specifically in the first week of December, where the counter closed about 1800 and went up to 1880. Though it is right now in the correction mode, but the trend, which is open from May 2024 so far, is very positive. It's clearly making higher top, higher bottom, and it's considered to be the retesting of the breakout zone, which was near 1800 levels, and the previous breakout was 1700. So this 1700 to 1800 looks like a bargain buying opportunity to me. The stop loss on this entire view is around 1670. If the counter falls below that, then the breakout can be considered as a trap, and we might see the further correction till around 1500. But otherwise, this level seems to be the perfect level to initiate a buy. Now, can we catch the falling knife is a question. So for that, we have kept the reversal level of 1730. That's around 20 points up from the present level. If the HDFC Bank goes above 1730, then with the stop loss of the 1700 as a conservative one and lenient stop loss of 1670, one can capture the rally and ride the rally. I think the targets can be 1950 to 2000 levels.
Coming in on HDFC Bank, the business updates weren't too impressive, but it seems like there could be an opportunity to make a quick buck on the stock. Sunny, what is it that you're making of HDFC Bank and banking as whole, really? Business updates were rather mixed. We've had a handful of banks that have reported actually pretty solid business updates. You've also had, other businesses, so non-banking companies such as an Angel One that have come out with strong reportage. How would you place your bets ahead of earnings across this sector?
Again, coming to banking sector, Samina, I think again a mixed bag set of numbers. So if you look at a few banks like Bank of Maharashtra, CSB, that is Catholic Syrian Bank, Karur Vysya Bank, Bank of India among the PSU. So these are the few banks which has reported more than 12-13% kind of advances and deposit growth. So again a clear outlier. On the other hand, banks like HDFC, Union, or for that matter, South Indian Bank have disappointed in terms of advances and deposit growth for Q3. So would like to stay with the banks which are reporting healthy advances growth, and at the same time deposit growth is at least in line with advances growth, so that we know that the pressure on NIM going forward will be very minuscule for this bank. So again, if I have to pick among the recent updates by the bank, so I would like to go ahead with the Bank of Maharashtra, Catholic Syrian Bank. And among the NBFCs, the Bajaj Finance has again reported a very strong set of growth, more than 25% kind of advances growth. So I think Bajaj Finance is the one name I would like to keep on my radar among the non-banking financial services space.
So Bajaj Finance is the NBFC space bet. That looks interesting. I mean, I'm wondering what you're thinking about auto right now, Sunny, and let me come to you on that. Initial data from FADA is out. Auto sales surprised on the positive when the numbers from the factory gate came out earlier this month. But it's a bit of a mixed bag, isn't it? Would you look at autos, two-wheelers or passenger vehicles this year, or anything that you're finding interesting right now?
Again, within the auto space, there was a clear-cut surprising number from Eicher Motor and Maruti. So again, I would like to keep on my radar Maruti and Eicher Motor within the auto space. Mahindra and Mahindra continue to be remain outlier, both on tractor side as well as on SUV, that is a passenger vehicle side. So no doubt Mahindra and Mahindra is a first preference and followed by Maruti and Eicher. And at the same time, what we believe is that auto ancillary players, which are basically powertrain agnostic players, case in point Lumax Auto Technology, which basically supplies components to both the powertrain player, whether it is the IC engine or EV. So Lumax Auto is the one company. Again, one has to keep in mind that for Lumax Auto, Mahindra contributes more than 30% of the sales, and they have presence in there all the leading top selling model of Mahindra and Mahindra. So Lumax Auto, again, we have recently initiated coverage, and our price target is 857 with an investment horizon of 12 to 18.
Okay. You know, the other thing is, Sunny, I don't know if you looked at this this nod that has been given by BPCL for the MNGL listing, and the brokerage notes that we read, especially cities, seem to suggest that there is significant value unlocking that could happen for IGL. Now, is this, have you looked at it? Do you know about this? And is this a good enough reason to trade or buy into IGL tactically?
Sorry, Neeraj, I am not aware about development. Yeah.
Completely understand. Okay, I wonder, Kunal, where on the charts does IGL find support? Because it has been in a corrective mode, but there is a fundamental development which is positive. So is there a support area for IGL or not quite really on the charts?
So Neeraj bhai, again, on the IGL chart, if you look at the historical data from 2020 so far, this counter tested 330 marks almost 3 to 4 times. 3 times precisely. And on the higher side, this counter is not able to cross 560 mark. That's been almost last 4 years. Now, if I look at the recent development, recent bounce, actually it started from 310. It's right now at 425. The immediate support on the daily chart is at around 380. Because of the spike, the massive uptick, the stop loss is far away, the support is far away, that's 380. And the resistance is right now placed at around 450. So one needs to strategize accordingly. I think in the correction near 385, 390, one can think of initiating a buy. Then the breakout can be considered as 450. So for the momentum trader, if the counter goes above 450, it can be a good buying opportunity. But on a broader time frame, I think this sideways consolidation is on the way, and it's right now in between. So, you know, the risk reward for even the long is not really favorable for going absolutely positional on this.
Well, it's now time for a big brokerage. It's 9:05. Harsh is standing by with a report on the recently listed auto major Hyundai. Citi, I believe, has initiated coverage with the buy rating. Harsh, what is the brokerage saying?
Well, they see an upside from here and a strong one. They see 23% upside, 2250 being the target price. What they're saying is their thesis, or their initiating coverage thesis with a buy, suggests strong parentage one from the Hyundai Motor Company. Second is their diverse model lineup, including their focused strategies on SUV as well as higher ticket and more premiumized segments of the auto auto sales. In terms of the focus on premiumization, definitely a positive, because those are the trends that are playing out in the market as well. Wider sales and service network is the other positive that they see in Hyundai, and strong brand is also what they believe Hyundai has achieved. A potential upside from exports could well start to play out. Capacity expansion at the new plant should boost volumes from second half FY 2026 onwards. Are some of the other factors that they believe will play positively for Hyundai. Key risks here: elevated competition, relatively extensive related party transactions is what they mention, and the third part is regulatory risks. All three of those could well be huge risks. Now, their price target is largely based on a 22 times FY26 EV to EBIT. This is at a 5% discount to Maruti, of course, because Maruti is the leader of the pack. They also see that Maruti's market share is higher, and therefore they've ascribed a 5% discount to the valuation that they give to Maruti.
For that, Harsh, so it's a Hyundai over a Maruti for City at least. Well, we have with us Rahul Arora, CEO of Nirmal Bang Institutional Equities, joining in. Good morning, Rahul. Happy New Year. Thanks for joining us. How are you feeling about 2025? It's looking like a tough year for Indian equities. Not like the previous year was easy, but nevertheless.
Good morning, Samina. Happy New Year to you and the entire team and the families. Yeah, I think it's going to be an interesting start to the new year. We have a new president getting sworn in to the United States in a few days from now. We have the union budget in about 3 weeks from now, and then we kickstart earnings later this week. So I think there are a lot of moving parts. Add to that, while the geopolitics seems to be somewhat okay, there's no significant deterioration on that front, but I think news flow on the health front from China hasn't been too or rather, let me put it this way, has been a little disconcerting for the markets over the last couple of days. So I think it's going to be an interesting 30 days. It's going to be very difficult to take a directional call. I think it'll probably be best to take a directional call, say, closer to the mid of Feb as to how the rest of the year pans out. But this is going to be one hell of a challenging year, I think, whichever way we look at it. And all the things that I said notwithstanding, just principally because I hope last quarter's results were not anything to go by, because they were probably the worst quarterly results in many, many years that we have seen. If we are able to follow that up with a good earnings season this time around, or at least better than what we had last time, we could probably safely say the market had found some flow. But if earnings continue to be bad in the wake of an uncertain US environment and uncertain China environment, then I don't know. Probably all bets are off as to what the market does then.
Good morning and a Happy New Year, of course, formally on TV. But here's the question. The updates that have come out thus far don't inspire the confidence, right? I mean, GCPL mid-quarter 3 gave an update about a weak quarter 3, and FMCG will likely dole. Banking numbers haven't necessarily been the best. Yes, there is an odd Bajaj Finance, but otherwise fairly quiet. Very likely we'll see not so great an earnings season.
I think you've hit the nail on the head, Neeraj. I think if you look at the composition of the Nifty today, you are almost, 40% BFSI, IT services is about 12-13%. Consumer will be somewhat similar. And if you add a Reliance to it, you're already talking about 75% of the Nifty. So I think when you talk about an earnings upgrade or a downgrade cycle, I think these 4 pillars of the market have to play very important roles. As you rightly pointed out, and in fact, we had put out a very detailed thematic recently which said that credit and deposit growth has converged after a very, very long time. And it's not inspiring too much confidence, because I think, credit growth has dropped down to about, depending on which month you pick up, because we put out a sectoral credit deployment report, it's hovering between that 11 to 12.5%. And if the economy continues to slow, then there is a risk of that slipping into single digits. I think you're bang on, Neeraj, in terms of the commentary that you're talking about from consumer companies. I think, even Hindustan Lever is struggling to give you 2-3% kind of volume growth. The only consumer companies that you're seeing, positive traction are consumer discretionary companies. I think you saw that in the commentary of Jubilant. We've done some challenge checks in the alcohol beverage sector. So I think there's some positive commentary coming there from hotels and aviation. But if you strip that out, I think core banking, core consumer is a bit of a challenge. We put out our ID sector preview, earlier this morning. Barring HCL Tech in the large caps and something like a Coforge and a Persistent in the mid caps, I think most other companies are probably going to grow at between 0.5% to 2% quarter on quarter. I mean, these are not numbers, Neeraj, that you'll want to pay 25, 30, 35 times. And for consumer companies, 40, 45 times valuation. So there is certainly a challenge as far as earnings is concerned. I think, Neeraj, I think the optical number is now less relevant. I think the market will cheer if, say, a 2-3% volume growth for lever goes to a 5%. I think the market will cheer if a 10-11% credit growth was to go to a 13%. Optically, these numbers are bad, but they're still better than, the previous bad number, so to speak, the lesser of the two evils. But you're absolutely right. I think, Neeraj, when you're looking ahead to FY26, I think, the best of margin expansion seems to be behind us. The best of deleveraging seems to be behind us. So even getting a 15% earnings growth could be a bit of a challenge for the fiscal year that we're getting into. I think the only positive that the market could potentially hang on to is a positive budget. Like I said, the lesser of the two evils in terms of the result season. and perhaps maybe a rate cut before the fiscal year ends by the Reserve Bank of India. If these three things happen, at least we'll be able to say the market has found some sort of a floor in and around where we are currently. But all things said, I completely agree with your point that, given the commentary that we have seen, it's not looking all that bright as of today.
Rahul, hi, Tamanna here. So just looking at what the light is at the end of the tunnel or the silver lining, you're essentially saying it comes down to what North Block does and what the RBI does. Not so much demand consumption of the private sector at all. Then where is the bet?
So Tamanna, if I was to just break it down in a very simplistic way, right? If you look at growth, when you're talking about growth and you look at the formula for GDP, which is C plus I plus G plus X minus M. Now the X and M is export and import, as we know, but that can change so dramatically if Trump does something to tariffs, not only to China, but to India and other emerging markets. So at this point, to take a definitive call on X and M could be a bit of a suicidal call. And, we've seen the balance of payments and we've seen the current account deficit numbers that are coming in. A lot of that is being driven by gold imports that we are having. So, what is the stance that the government and the RBI takes in terms of gold imports? The point I was making to Neeraj earlier about credit growth, a lot of that against also is for loan against gold. It's not so much against property and vehicles and so on and so forth. So I don't know so much about the X and M part. But you're down to C, I, and G. C we just discussed. Has a bit of a problem. Consumption, there is, barring discretionary, there is a problem. So you're down to investments and government spending. And I think, generally in India, private capex has lagged government capex. And I think that's why, most people, I'm sure that you also have spoken to over the last 3 months, would have told you that the onus squarely lies on government spending from here. It's because the other four legs are not aspiring too much confidence that the onus has come back on state and central government to lead the capex. Now, whether they do it through infrastructure, irrigation, ports, defense, railways, etc., remains to be seen. But I think that will probably have to kickstart, and which is why we think at our brokerage house that even though valuations, fluctuate very wildly in these PSU government-related stocks, it may not actually be a bad theme to be playing, including something like a defense, because the order books are there. Even if these guys just execute the order backlog that they have, these guys can grow at 20-25%. That is the strength of the order backlog. So I think consumer discretionary, government capex related stocks could probably be two places that we could certainly look to hide. And within consumer discretionary, like I said, hotels, Alcobev, aviation would probably be our preferred areas.
Okay, 10 seconds to go. And by the way, remember, Nirmal Bang was amongst the first ones to downgrade defense names. I'm hearing Rahul say that defense could be a pocket to hide in or watch out. So keep an eye out on those stocks as well. We'll take in the top call from Kunal Rambia post-market open, because the markets are starting. We have a tick of green, exactly in line with what the implied open was suggesting about an hour ago. Bang, everything participating, if you will. I wonder if IT is participating as well. In fact, 0.5% or thereabouts. So the strongest of the large indices. Mid caps 0.5%, small caps 0.5%. Let's see if this is sustainable or does this get sold into. In fact, that is something we'll ask Kunal Rambia immediately as well. Sea of green, very little red. The one you can actually lay emphasis on is ONGC. Second big brokerage after Jeffries, CLSA, to upgrade ONGC. And that stock is revving up, 2.5% higher in trade. Somewhere in the next 15 minutes, we'll tell you what CLSA's rationale is, but that's the top stock. Some gains to consumers' names, Titan, Tata Consumer, doing okay. HCL Tech, about 1.25%, Tech Mahindra. But effectively, just that, a tick of green, almost everything doing well. ONGC and BPCL with reason. Just one last point on BPCL, viewers. Remember, the way IGL benefits by virtue of MNGL listing, so does BPCL, because BPCL has about 22.5% stake and it has given the in principle nod for listing of MNGL. So I think those two, with some reason, active, but nice to see a bit of green.
Relief to see a bit of green, I would say, Neeraj, after what was a tough day yesterday, 0.5% up on both the Nifty and the Sensex. The broader market's also not doing too badly. Let's just pull up the mid-cap and the small-cap indices before we go to the sectoral heat map. Better recovery there, in fact. 0.75% on the mid-cap, the small-cap nearly 1% up. But remember, the mid-cap had lost the most steam yesterday. The entire index was down nearly 2%. Let's pull up the sectoral heat map very quickly for you and tell you what's working. The story is about oil and gas this morning. ONGC, BPCL, both doing well. The energy stocks also, obviously the Nifty Energy tagging along, as are the CPSE, Nifty CPSE, that's the public sector companies. Only the India VIX in the red, and that's great. So fears have been calmed. I think enough information out there in the last 12 hours or so to explain that this new virus is not as deadly as one would have thought. It's not going to lead to any kind of a situation where you have economic activity stalling. I think that's what you're seeing reflected on the screen this morning. Specific stocks that we are tracking today. Let's look at Info Edge. Positive business reports, positive business updates for the company, and pretty stellar quarter is what it seems to be looking at. So Info Edge was doing very well pre-market, obviously seeing some hit right now, about 3% down. Nuvoco Vista is the other one. They have a cement acquisition, of Vadraj cement acquisition. That's stock about 2% up. ITI has been running and was running in the pre-open session. Once again, about 4.5% up. I want to pull up Zomato. Jefferies has downgraded Zomato to a hold from a buy. Stock now seeing quite a hit. In fact, they've cut the EBITDA outlook for Blinkit quite aggressively, about 5% down on the Zomato stock. Let's look at the auto pack. FADA numbers out today. The two-wheeler sales have dropped 17% year on year. And you're seeing a spot of red over there. I was wondering if you can pull up TVS as well. So two-wheeler is not doing too well, but auto is okay. Virus fear impact. These stocks were running today. Has that eased? It's an interesting gauge to see right now. Rainbow Children's Hospital is up 1%. Is it because this virus is expected, unfortunately, to impact smaller children more? Apollo Hospital was running yesterday. It's cooled off. So is Metropolis. So it's very clear that the street is now understanding that this is a virus with a limited impact and nothing too much to panic about. I don't know if that gives us hope of this rally sustaining today, Samina.
Looks tough, Tamna, but for now we'll just enjoy what we have, which is a little bit of green on the screen. The street's still concerned about so many factors that have been weighing on it in the last couple of months now. Well, a quick check of what is moving beyond what Tamanna and Neeraj have indicated. On the sell side, Zomato is the sell call of the morning, and so is Info Edge. Info Edge business updates were looking okay, but I don't think the street seems too impressed by what they've seen. The stock is down 3%. Easter Planners, which was up and hit upper circuit in trade yesterday, is down about 20% as we see it. You've got WeGuard, 361 WAM, Blue Star, Adani Wilmar, Westlife. Those are a few handful losers beyond the ones highlighted already. On the buy side, Aegis Logistics is up 6.5%. Intellect Design is up 6%. Oil India is looking good. Biocon is up in the bar, and we'll go to that management in just a minute from now. ONGC, UTI Management, Just Dial, Gristle, KFinTech are some of the other big gainers in the session. So no real theme emerging just yet. What you're seeing is a little bit of broad-based movement upward after a broad-based sell-off that the street had witnessed in trade. ONGC is the stock of the morning on back of what CLSA said. CLSA has a high conviction outperform with a target of 360 rupees, and that's what is giving ONGC a much needed bump up. They've also said the recent production ramp up at KG 98 has raised audience confidence, increased gas prices, realizations to become visible in its Q3 earnings. Rahul, that of course is the ONGC story, and you've got a whole bunch of other names that aren't doing too badly, but I want to continue talking to you about valuations and earnings, right? According to Bloomberg, 433 stocks from the NSE 500 for which earnings estimates for FY26 are available. A staggering 273 are trading at P multiples which are north of 25 times FY26 earnings, and another 85 are hovering in the 15 to 25 times range for FY26. Now this is stretched, is what I would think, right? No matter how well the next quarter is, valuation still not showing signs of easing, in my opinion. Would you agree? And would you then wait for valuations to become a little more acceptable before you make any sort of considerable allocations?
So there's two parts to that, Samina. One is that the reason you saw the stock price reactions at the end of the previous quarter's results is because most sectors and most stocks in India were trading between 1.5 to 2 standard deviation above 3 and 5 year means. So that was the one consensus call that everyone had, that valuations across the board were expensive, and that's why you saw the exaggerated sell-off. The second point to that, Samina, is despite let's say, the worst of negative flows or news points that you have around a particular sector or stock, the liquidity in the market is so much. And this is not a today phenomenon. I'm sure you're tired of hearing about it as well. This has been the case over the last 4 or 5 years, since the low of 7,500 on the Nifty during the lockdown, that every quarter when you have funds or foreigners making their adjustments, you are finding that the pressure on quarterly performance has increased from a fund management standpoint as well. Obviously, there have been certain, regulatory changes as far as mutual fund managers are concerned, where some part of their salaries are locked into their funds as well, which has increased the pressure on performance and has probably made the horizon a little shorter in terms of monitoring it. So, the famous QSQT that we used to talk about with respect to earnings, that has actually come into the fund management industry to some extent as well because of the pressure of performance. Now, what happens is, I think those days where you saw, major derating of stocks on shallower liquidity, I think, are a thing of the past. Today, if you have a good quality stock that's down 15-20%, I don't think the market is waiting for much more in terms of correction, because they're like, agar main nahi le lunga, koi aur le lega, and they don't want to miss that 5-6% of alpha on a particular stock. So while you are seeing corrections, and you're probably seeing more time corrections than absolute price corrections, a classic example, like Neeraj was talking a little while back, we downgraded the defense sector. I remember within 3 months of us downgrading the sector, while the stocks were down 50%, they rebounded 50% in the next 1 month. So I think that's probably what's playing out in the market, is this fear of losing out if you wait too far on the sidelines. And that's why cash deployment is happening. Samina, the one very important thing is, for a lot of first generation people who entered the market post 2020, 2021, they've not seen a meaningful correction in the market. And to be fair, I know stocks have corrected in a material way, but you can't really call a 26,500 Nifty down to a 23,500 Nifty a correction when you had a Nifty go from 7,500 to 27,000. So you've had a Nifty that's gone up 4x and you're down 10-15%. I understand we as human beings have a recency bias and we don't look at how much money we've gained in a rally, but we tend to look at how much we've lost from the top. But I personally think that despite the challenges that we have, the liquidity in the market will provide a support, which will be an optical illusion. But, I guess that's what we have to live with.
Okay. Well, Rahul, may not be the best of the year for making money. Maybe a good year to inculcate some discipline, I guess. But thanks so much for bringing that to us. Really appreciate your time this morning.
Thank you so much, Neeraj. Pleasure.
All right. Well, the market's 0.5% or slightly above that higher. Sunny and Kunal, to you, both of you. And thanks for waiting by patiently. Kunal, I'll come to you first. Would you sell this rally or would you not do anything?
So Neeraj, it's always great to hear the other voices also on our channel. Coming to this bounce, as I said, it's actually from the support level itself. I'm very comfortable buying. And the counter which I have shortlisted just now is the Reliance itself. Now see, this counter is not falling below 1210 mark. It's been almost 3 months again. I think this can be a good buying opportunity. Keeping the stop loss of 1210, one can initiate buy on Reliance. And the targets can again be, the previous highs, which are 1260 to 1275. That's the first counter which I shortlisted. And the second is the Hindustan Lever. I think this counter is again starting from extreme low levels. It actually retested the breakout zone and it's moving up again. So HUL future is right now trading at 2395 with the stop of 2375. One can initiate a buy, and the positional targets on this can be 2460 to 2470. So these are the two large cap counters which are shortlisted, along with HCC, which is anyway doing good as well.
Would you go along on the Nifty, Kunal? I mean, if anyone watched our closing show yesterday, Hemen Kapadia, at the end of a terrible day, stuck his neck out gingerly and said, a buy on the Nifty at the low of yesterday. That call
Wonderful.
Seems to have worked out. What would you say right now, Kunal?
So yes, absolutely. This is very comfortable level. If someone initiated buy yesterday with the stop below yesterday's closing, one can initiate a fresh buy also and hold on to the position. I think 23,900 to 950 is very likely. Because of this support zone, I expect the bounce to continue.
Okay. Sunny, oil and gas seems to be the main piece of the morning, right? So, I don't know if we spoke about ONGC, but if we haven't, I don't think we have. Are you constructive upstream oil, ONGC? Are you constructive maybe a BPHP IOC? Because the marketing margins in Q3 will look solid, and therefore for HPCL, that's a bit of a trigger as well. What do you feel about this pocket?
Yes, definitely, Neeraj. Compared to quarter two, I think quarter three numbers will be far better for both upstream as well as downstream companies. Especially for downstream companies, so we have seen Singapore GRM has bounced back from a lows of $1 to $2 to currently trading in the band of $4 to $5. So definitely, I think a top pick among the oil marketing company will be HPCL. On the top of that, there is a talk in the government that the subsidy burden pertaining to LPG, that is something which will be compensated by the government maybe in a coming quarters. So that will again add a catalyst to the earning for oil marketing company. So I would like to remain positive on HPCL among the downstream company. Among the upstream company, the no-brainer definitely ONGC is where we have where the production is likely to go up for the gas. That's a clear-cut top pick as far as upstream companies are concerned.
All right, thank you so much, Sunny and Kunal. Great as always to speak with you. Let's hope this green on the screen sustains at least for some time in the market. But one pack which is really moving, and ONGC among them, has emerged as one of the top Nifty gainers this morning. This is because of a CLSA upgrade to the oil and gas major. Mehika is telling us more.
Yeah, so CLSA has done its upgraded ONGC from an outperform rating to a high conviction outperform rating. The brokerage has also hiked the target price for the upstream company to 360 versus 330 rupees earlier, and this puts a potential upside of 41.2%. Now, in terms of the view on ONGC's business, well, the recent production ramp up at their KG 98 block, kind of raises confidence for the company's ability to meet its peak production targets. What CLSA is saying, they also saying that the increased gas price realization, this isn't regarding of the ONGC's new wells getting a premium pricing in terms of the fixed pricing. This the results of this will be visible in Q3, and also the removal of windfall taxes will allow ONGC to have higher crude realizations, about the $75 per barrel mark that the windfall taxes were previously capping the realizations on. CLSA has also raised the FY25 and FY27 EPS estimates by 2 to 8% because of these factors, and it's also noted that ONGC is currently trading at a material discount to its peer average, and this comes despite multiple growth triggers for the company.
For that, Mehika, ONGC doing well this morning, and the entire oil and gas pack actually. We'll get a more detailed report on the IPO node, which has BPCL up in the green as well. So it's not just ONGC, it's BPCL as well. But let's now take stock of Biocon Biologics. It's been a year since they've become a global biosimilar company. I caught up exclusively with Shrihas Tambe, MD and CEO of Biocon Biologics, and here's what he had to say on the growth outlook.
It's been a great year overall, I would say, stepping back, not just the last quarter which you referred to, which was an amazing way to end the year. We couldn't have had a better way to end the calendar year that we did, with the kind of approvals and the recognition of all the effort that our teams have put in to work with global regulatory agencies and setting us up in a very nice way to get to the next calendar year. So I think the end of the year was good. But having said that, the year itself, Tamanna, has been a very, very eventful year for us.
Now tell us why. What do you think has been the biggest challenge, and what has been the biggest achievement in your view?
I think the way I would see it is that these are two coins. These are two sides of the same coin, whether it's the challenge and the opportunity. And we've had quite a few of those at Biocon and Biocon Biologics in particular. The year that went by was another eventful year. It's really transformed us into a truly global, multinational, multicultural, global company, which is amongst the top 5 biosimilars companies now in the world. We used to be known for our innovation, which we continue to be focused on, which is a science and operations company, or development and manufacturing, as they would say, to now having got through the acquisition that we did in November of 22, a very strong commercial engine. So we are now a fully integrated player, one of the top 5, as I said, and in over 120 countries, where through our own self-led teams as well as our partner-led teams, we are in a better position to reach out to more patients and serve them with these high quality products that we are developing and manufacturing at Biocon Biologics.
Let's talk specifically about the two approvals that have come in, one of Yes Intech and Yes Affili. What are the launch plans? What is the kind of timeline for this? What can you add, Mr. Tambe, in terms of the market size and revenue addition that you expect from these two?
Yeah, and I must first compliment you for the way you pronounce them, because that's the exact way to call them out. The year is to look forward to the Yes Affili and Yes Intech. These are the two products that we will be looking to launch in the coming year, and we have been able to navigate the IP landscape. So you will see us bringing these two products, which are focused on debilitating diseases, one in immunology and the other one in ophthalmology. So the Yes Intech product launches in the US in February of this year. It also has a global launch plan, because we also will bring it to patients in Europe and other parts of the world in a staggered manner. And we'll also bring Yes Affili, which is the ophthalmology product for certain very debilitating conditions for patients where the injection is an intravitreal injection, so it's injected into the eye. And these are products that we are very proud of, and we'll bring those to different countries as we navigate the IP landscape. The first one will be, of course, Malaysia and Turkey, and we'll bring them into Canada shortly. So a lot of interest and a lot of excitement about these products in the months to come.
What are the broad timelines that you can share with us, Mr. Tambe? And I'll reiterate my question on revenue contributions that you're expecting in year one.
Yeah, as I said, the timeline it starts right away in this financial year for Yes Intech, which is starting in February of 2025, which is in this quarter. So you will see that starting to make a difference right away. And you will see Yes Affili, which will start probably in the first half of next fiscal year. So that's how we have phased these launches. But in addition to these two new launches, Tamanna, there are several other products that we're launching as well. The year that went by saw 60 product launches in different countries for products that we had sold in the US and Europe before, but we launched them in 60 different countries. So it's a very busy time at Biocon Biologics. So that's the first part of the question. The second part was you asked about the revenue contribution. We've refrained from giving specific product related revenue contributions. But I think what is very, very important to note is how we've grown the business. If you just look at last year, we've had a 58% revenue growth over the previous year, and a 64% growth in EBITDA. So it's not just been a sales increase, it's been a very profitable sales increase. That's when you call it growth. A 25% EBITDA margin with that kind of a growth where you're over $1 billion in revenue, I think bodes very well as we get into fiscal 26.
Well, the stock of the day is Biocon. It's already up 4.5%. To catch an exclusive conversation only on NDTV Profit, where Shreyas Tambe is in conversation with Tamanna Inamdar. Catch it at 12:30 p.m. on the channel. Well, moving on from there, one stock that is in focus in the management of who we will be talking to shortly is Gensol Engineering. They, of course, are back in action with their recent solar PV project win in Gujarat. Mika joins us with more on that. Mika, you want to tell us a little bit more about this 1,061 crore solar PV project in Gujarat, what it means for Gensol, and of course, what it means for the outlook and guidance?
Yeah. Gensol Engineering is engaged in the business of solar consulting and EPC, as well as diversifying into EV manufacturing and EV leasing. Now, the latest order win is a 275 megawatt EPC contract for a solar PV project in Gujarat. Now, the total bid value is around 1,061.97 crores, and the contract also includes a 3-year portion for operation and maintenance services, which is something that we've seen in most of its EPC contracts. Now, in terms of revenue visibility, as per the company, they do have 8,300 crores of revenue visibility over the long term. This is as per their Q2 investor presentation, that this comes from revenue from renewables as well as battery energy storage projects spanning over the next 12 years that the company is focusing on, as well as solar power generation projects over the next 25 years.
Thank you, Mika, for that. That is, of course, Gensol Engineering that we're talking about. We have with us Anmol Singh Jaggi, MD of Gensol Engineering, joining in. Anmol, good morning. Thank you very much, Mr. Jaggi, for joining us. Firstly, congratulations securing a 1,061 crore solar PV project and the 897 odd crore NTPC renewable project. Firstly, can we start with you providing us timelines for the execution of these contracts?
Yeah, good morning and thanks for having us. The two projects that we have won are basically projects which are going to get delivered in about 18 months timeline. Solar projects of about 1,000 crore plus in that range are generally the timeline is between 15 to 18 months to deliver them.
Okay. What is the expected margin profile for these orders and how do they compare with your existing solar EPC projects, sir?
So on the margin front, we have kept margins stable. Our existing projects are also between 12 and 15% EBITDA. And these projects also will deliver EBITDA of 12 to 15%. So we will have a similar margin profile on our previous projects that we have been doing and on the two large wins that we have had recently.
Right. Mr. Jaggi, how are you positioned to secure more sort of large-scale contracts? What I want to understand is, are there any upcoming tenders in the pipeline that you're bidding for that we could anticipate and expect announcements on this quarter?
So we continuously bid. We have a large bidding pipeline. In fact, the whole renewable energy sector is doing extremely well. And in this, there are a lot of tenders which are coming out. Not just tenders, there is a lot of action on the private side also, where a lot of private IPPs are setting up capacities and they need good large EPC contractors like us to execute for them. So I think we have a very strong pipeline which we are bidding for, and I am very hopeful that you will hear some more good news in this quarter.
What is the outlook for the end of the quarter, Mr. Jaggi? And what are you looking at ending the year with in terms of the order book size?
So currently, I think our order book, including energy storage, is about close to 9,000 plus crores. I think we will be able to add a couple of thousand crores more to our order book before the quarter ends.
Your unexecuted order book currently stands at 3,400 crores with 200 contracts under award. You want to tell me the timeline for execution of this and when will this be revenue accretive? Will we see it in this quarter? Will it be FY26? Just help us understand that.
Sure. So I don't, from the current order with very small quantity of revenue will be booked in the two orders that we have won in the last 1 week. Very small quantity of revenue will be booked in. Majority of the revenue from these two orders will be booked in Q2 and Q3 of the coming year. So from these orders, we do not expect any large revenue increment to come in Q4, the quarter in which we are. But our existing order book is very healthy and we would do a good show when it comes to our quarterly results. I think on a whole, Gensol has been growing 60, 70, 80% year on year, and we will continue to deliver those kind of numbers.
Phenomenal. Your net profit has grown 52% to 50 crores. But I don't know whether I missed it, but possible to quantify the expected revenue contribution from the unexecuted order book for this quarter and FY26 as well, sir?
So I think if I remember clearly, last year, Q4, we did 400 plus crores revenue. And like I mentioned, Gensol will continue to grow between 50, 60, 70%. And this quarter also, we will do 50, 60, 70% growth over the last year.
What is the split between revenue visibility between renewables, battery energy storage and solar power generation?
So battery energy storage has close to zero contribution for this year. The contribution from energy storage will start from the coming financial year. And on the renewable side, I think today it is primarily, like I mentioned, the 75-80% of our revenue is coming in from the solar business, and about 20-25% of our revenue comes from the EV leasing and EV leasing business. So these are the two business segments that we operate. Energy storage, you would see perhaps the revenue coming in from next year, from FY26.
You know, Anmol, it's been phenomenal for you and the company, right? Recently, at least, and your run rate in the first half of FY25 your revenues grew 49%. Now, is this a one-off? Is this sustainable? Do you feel like this run rate could continue for Gensol over the next 2 to 3 years?
So we have been delivering not just in H1 of FY25, but if you look at FY24, we delivered very stellar numbers. FY23, we delivered stellar numbers, of course, coming from a smaller base. But as our base continues to grow and the order book is extremely strong and we have some fantastic wins and the sector has some fantastic tailwinds, I think this does not look to me like a one-off, but it looks like a very structural story where renewable energy is becoming mainstream and companies like us and others who are in this sector stand to benefit from it.
So margins have significantly improved. Now we are staring at 25.8, I understand, from 16.1 a year ago. What is this? What is this margin expansion about? Is it because you're managing to win orders at a better margin profile? Or is this more optimization internally that's leading to this? Or is it simply economies of scale? And of course, looking into the next couple of years, can we expect margins to expand further, maybe even inching up all the way to 30%?
All three of the factors that you mentioned, one, of course, is economies of scale. Doing a 1,000 crore project, doing a 1,000 crore revenue versus doing a multi-thousand crore revenue, of course, gets you more economies of scale without any doubts. Two, on the client side also, there is a good pricing power that EPC contractors now have, and if you look at quality EPC contractors in the renewable energy space, there are very few. And we are one of them. So you would see that we are doing, there is pricing power that contractors have. And three, I think our procurement team is doing a brilliant job in getting the best quality materials at the best quality prices. So we are seeing all three contributing: internal, external, as well as economies of scale. And on the margin side, I don't expect us to increase further margins over here. We'll be very happy to maintain our margins at these levels.
And Mela, also, of course, the going is good and it looks healthy and the outlook looks positive. But I must ask you, right? I mean, you're also playing catch up in some ways because you're growing so significantly. And more often than not, the back end takes some time to play catch up. Are you at this stage anticipating any overruns or delays, cost overruns, delayed payments, delayed deliveries? Anything that we should be a little more mindful of as we look ahead? Or anything that you're preparing for internally?
No, absolutely. I think while we are growing at a very significant pace, it is important to build up the right team, and we have had some very significant team additions. Shilpa joined us as the CEO for the EPC business. We have had a great CFO joining in. So I think the combination of our great CEO and great CFO along with the execution team is taking us to near heights. While we grow larger, we have to, of course, be having decent risk management in place, and as a team, we are doing enough risk management, whether it is on customer size, whether it is on customer payments. And you look at this, that if you look at the first 6 months of the year, actually our operating cash flow is greater than our profit. So we have been very good in collecting cash from customers.
And Mela, I know you alluded to this at the start of our conversation, but while I wrap this conversation up, any sort of closures, any sort of orders that are close to closure this quarter that we should be keeping an eye out for? It's always exciting to know.
We are bidding well. We are in a very good space, and Gensol will surely win some few more orders in this quarter and the coming quarters. Specifics I would want to avoid, but surely these are not the only two orders that we have won. There are many more which are coming in.
We are excited for you. Congratulations, good luck, and hopefully 2025 brings with it a lot more success for the company. Well, we'll do a little bit of a detour and move from a hardcore EPC company to what's happening on the consumption side. The grand spiritual festival Kumbh Mela is all set to take place in Prayagraj. This time around, it is celebrated every 12 years, which draws millions of pilgrims from across the world. Uttar Pradesh government has made the biggest arrangements to make this Kumbh successful one. Anushi joins us with more on this. Anushi?
Hey, so it's one of the biggest festivals that we'll be watching forward in 2025, Mahakumbh 2025, all eyes over there. It's the world's largest public gathering in terms of where the spirituality lies as we speak. Religious pilgrimage that is celebrated 4 times over a course of 12 years. This is for Kumbh Mela. What makes this more special is the Mahakumbh 2025, which happens once in every 12 years. So something all eyes, all devotees would be here in Uttar Pradesh, and that's where our focus would be. Now, this is expected to take place in Prayagraj starting from January 13 onwards, which will go on for the next 45 days and end at Feb 26, 2025 on the occasion of Mahashivratri. So what next can we expect from this? How will this contribute to Uttar Pradesh government, the economy and all? The government is expected to spend about 7,500 crore. This is as per the reports. A lot of arrangements being made, which we will discuss later on. If you are to see the tourist influx expected from this in 2013, we saw about 12 crore of devotees in this. 2019, this number almost doubled, 24 crore. And 2025, the expectations is of 40 crore of devotees, which are expected to be a part of this Mahakumbh Mela 2025. Now, how this would result in the benefit for the company? This is expected to generate revenue of around 25,000 crore for the economy. This entails not just on the business side, but even in terms of employment generation and other festivities that are going to be made. Now, what should we be focusing on the stock specific side? Firstly, all the tourism stocks in focus. This includes Thomas Cook, Ease My Trip, Yatra, Rate Gain and Genesis International. This is on the occasion of the mapping that is going to be taking place. Next slide, we have the hospitality stocks in focus. Here, IHCL is the player emerging. So, Prayagraj is the destination wherein this Kumbh Mela is going to be held. But the adjacent markets, Ayodhya and Varanasi, are on the drivable distance. So, these are supposed to be benefiting out of it. And so, Taj Ganges, which is owned by the Benares Hotels and IHCL as an arm, can be a beneficiary of this move as we speak. The next bracket or the segment in focus that could be benefited from this is the food delivery apps that includes your Zomato, Swiggy and IRCTC. Even the railway and the aviation sectors are something that we should be watching forward for. We have the names of IRCTC joining the list again, RVNL in focus, and Indigo is another stock in aviation side. If you look at the rates also from Mumbai to Allahabad on those, we are looking at ticket prices faring above the 20,000 levels on January 12, the day before this event is expected to start. So a lot of focus has been drawn here. If you look at the arrangements that are being made in terms of where this is, even the security stocks, they are going to be installing more than 23,000 of CCTV cameras to ensure that there is safety maintained. SIS and Allied Digital is something that we should be focusing on. So overall, all these segments are in focus on the back of this Mahakumbh 2025 that we are looking at, and something that we should be looking forward to from Jan onwards.
Hey, big event there. Thank you for that very comprehensive look, Anushi. And it's an interesting way to look at the Mahakumbh, because we usually see it, of course, as a religious event. It is a huge tourist magnet as well. People come from all over the world to experience what happens in the Mahakumbh. But to get a sense of what the business and the economics of it is, I'm joined now by Preeti Satyanarayana. She's President, Ease My Trip, and Prashant Priyani, Vice President of Institutional Equity Research and Sector Lead for Agri Inputs, Sugar and Hotels at Elara. And I'm coming to you first, Prashant, because of a note you guys put out recently on Kumbh, and you also added Coldplay. And let me start with that broad brush sort of events-led growth that we're seeing. While we're talking about concerns about consumption, economy, etc., the fact is that wherever there are big events, there are people coming, and the local sector is booming.
Right. So because of a lot of MICE events that happens in H2, we see a decent amount of business demand as well as MICE-related travel, which drives growth for the industry. And right now, it is also a fact that because of the kind of places or convention centers that we have in Mumbai, in Delhi, these kind of convention centers of such capacity and such quality were not there previously. So now with these convention centers coming in, we attract a lot of events which were not happening of that scale previously in India. So that is an added advantage. So I think Q3 and in particular Q4 attracts a lot of these MICE related travel, which benefit all the hotel and travel companies.
Okay, so just let me get a sense of what the business perspective is. Preeti, just let me talk about Kumbh first. The overall view is that perhaps not too much tourism in terms of flight bookings, in terms of hotels. Maybe this is more train travel, maybe more temporary kind of structures. Is that really the fact? What are you seeing on ground?
Okay, let's understand Mahakumbh 2025 first of all. So Mahakumbh 2025 is coming once in 144 years.
Yeah.
The whole planetary cosmos concoction of the Jupiter, Sun and Moon is in this period. So it's a belief that whoever does the holy snan at the Triveni Sangam is going to be completely blessed and maybe moksha. So for your information, is just not the IRCTC or the train. We have large bookings in the aviation. We have large tourists coming from international. Ease My Trip has done the luxury tents. We are housing people to very large numbers, not only from India, but also from international and all age groups. So you might be wondering, it's only a 50+ thing. No, the youth are very, very anxious to do the holy snan in the Triveni Sangam, and we're booking all kinds of age groups in large groups to make sure that they do the holy snan at those snan dates.
So what does it mean? And thank you, Preeti ji, for putting that into perspective, that this is not the regular Kumbh. This is a once in 50 years event. It has a wide interest and a lot of people are coming from all age groups. I'm just trying to understand the economic aspect of it. What are the kind of upticks in bookings, for example, you have seen on your platform?
Right. So we were actually pre-arranged. We created this whole luxury tent, the Akhada, and we tied up with multiple other akhadas who are doing Havan and special Havan. And we have large numbers coming from South India. We have numbers coming in from the North, from USA, from UK. So if you look at the number perspective, almost 40% of our booking are the youth in the age group of the 30, 35. And then we have about 20% of our booking who are the senior age, who are staying there for a prolonged time, like 40, 45 days doing prayer only. And about 30% of our people who have booked with us are there for some special snan date and special puja dates. We're also housing people for special yagna and special akhadas with the Ayurveda teaching and to meet the gurus and the sadhus. So it's a very varied method of the holy connect, where each one is coming for their own purpose, each one is coming for their own moksha purpose. So it's really mixed and the numbers are large.
Okay. Now, Prashant, I was reading some of the things that that probably you also believe could happen, in that it's not just about the influx of devotees and tourists in Prayagraj, but adjacencies as well, which will have a tremendous benefit. So in some sense, Prashant, I would love to understand from you, what's the benefit for the ecosystem in terms of, let's say, percentage of annual revenues, if you will, or some context to what this could mean? Because it's one thing to say, oh, hotels will benefit. Yes, obviously. But two is, what kind of benefit comes in through an event like this?
See, for this particular Kumbh, while it is a 45-day affair, a lot of preparation goes on, maybe say for a month or two before the event starts. And so the demand not only kicks in from January or from the day first of Kumbh, it may be a month or two back as well, from where we can see the actual influx of demand coming in for the hoteliers. Now, this is point number one. Point number two, while this is a very location-specific demand for pan-India hoteliers like IHCL or EIH or anyone, it may be demand for one particular hotel. But for one of the subsidiaries of IHCL, which is your Banaras Hotels, another listed company, for them, Taj Ganges is they are a 2 or 3 property hotel only, out of which 2 are located in one premises of Varanasi. So just to pinpoint on a very stock specific, which can have a major benefit, it could be Banaras Hotels because it is a very location specific company. And for them, we have seen Q3 also driving rates for that particular property higher by around 20% year on year on the OTAs. And this was for the month of October and December, where we have not even seen the event kicking in. So in Q4 also, at least for the month of Jan and Feb, we can see a decent ARR growth for that particular hotel or the company as such as well. So that will drive the demand for Banaras Hotels. And in terms of financial impact, it will be more in Q3 and Q4, where because of very good ARR growth, we can see most of it trickling down to EBITDA as well, and then further down to profit. So H2 for that particular company may see a very good growth.
You are talking about Banaras Hotels, right?
Yes.
Okay, and Banaras Hotels at 8,300. Of course, remember viewers, it's an illiquid stock, up about 1%. I mean, relatively illiquid stock. So keep that in mind as well. Okay, aside of hotels, Prashant, very quickly, anything else that sees a material benefit? I mean, which might be having some listed space repercussions? Very quickly.
So stock specific, I would restrict myself to hotels only because that's the sector which I track. But I think air travel, rail travel, and as your colleague mentioned that before the start of this conversation, food delivery companies can also benefit from it.
You know, Preeti ji, we spoke about the Mahakumbh and what Ease My Trip is doing for Mahakumbh specifically, but I just want to get your view on how big a factor for travel overall have become the MICE segment or events overall. I mean, we've seen that with concerts. We're already going to be seeing a rush with Coldplay. The whole of 2025 is packed and lined up. Are you seeing that as a big segment growing forward, and what is the kind of potential you're tracking?
So as we're looking at Mahakumbh in this particular discussion, I would want to come back to spiritual tourism. For giving emphasis on spiritual tourism, Ease My Trip has launched a special vertical, Easy Darshan. So Easy Darshan has come in being almost a few months before the launch of Mahakumbh. So we prepared ourselves, pre-arranged ourselves with the luxury tents, with the food arrangement and all of that. And yes, coming to MICE, as per your question, MICE and the other segment is also attracting spiritual tourism because we have a lot of youth going to the spiritual sites, like the Ujjain Mahakal, like if you look at down south, you have Kumbh, you have the Rameshwaram. And for your information, we're doing the large groups like the MICE for these sector as well. And Mahakumbh also is attracting large groups, so you could also consider that as MICE. So Easy Darshan of Ease My Trip is the one who's done the special arrangement to ensure the complete comfort and the reason of fulfillment of the tourist visit.
Just hang on, I just wanted to mark the new kid on the block, 22%. So really not a dramatic listing for Indo-Farm equipment. Usually companies which would be subscribed so heavily would see some massive upticks. This is 26%, not a bad listing. Nothing as dramatic as maybe what the subscription would have made you believe, but it's a successful listing nevertheless. So we'll watch out for Indo-Farm equipment and what they do in the times to come. For sure, 27% and counting. So it's a stock which listed at 22% and then is rising as well. So bear that in mind. But Tamanna, interesting that once in 45 years, multiple avenues to benefit, and not just for the period of the Kumbh Mela, but pre, maybe a couple of days post, but largely pre and during the 45 days as well.
Yeah, so Indians are traveling in large numbers, and I think you can no longer sort of ignore the might of spiritual tourism as a whole segment of wealth creation as well. And we'll see that in the days to come. We'll take a very short break, but on the other side, we come back with Paras Defence. Huge positive move for Paras Defence. New permissions have come in. All of those details will be discussed with Amit Mahajan, the Director of Paras Defence and Space Technologies, after this very short break.
On my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. Markets holding on to the green, losing some of its gains though, and you're seeing that slide coming in off its highs definitely on the Nifty, giving up some of those gains. What's not giving up gains though is Paras Defence. Just want to pull up the Paras Defence stock, and interesting news coming in there. They have been authorized to manufacture modernized, enhanced, redefined LMG capacity. They've gotten a license from the Ministry of Commerce and Industry to manufacture light machine guns. Let's talk about 7% up. Speaking now to Amit Mahajan, Director at Paras Defence and Space Technologies, to understand more about this. Amit, thank you so much for your time this morning. Can you explain to us what license this is exactly, and what does it mean for your portfolio?
So this license is primarily for us to enable to manufacture light machine guns. Now what happens is we are doing a lot of control systems, we are doing a lot of work which eventually culminates usage of light machine guns. With this particular license, what we will be able to do is we might get an option. We can choose to get an option to do a complete machine gun with the control system and deliver a complete solution to the customer. So that's the intent with which we applied for this license. We're doing very many parts, either controlling or then subsequently surveillance and border defense systems, which involve light machine guns.
Which involve light machine guns. So what, as I understand, Amit, then tell me if I'm understanding this correctly. So far you've been doing components, now you can create the entire product.
Correct.
Okay. And what is the differential in terms of margins or in terms of size of orders that now are on your horizon thanks to this?
The order size will increase. The value that we deliver to our customers will increase, and definitely because a large portion of this particular gun, including the mechanical, because Paras has today mechanical manufacturing, electronics manufacturing, optical manufacturing, all of that in-house. So we will be definitely doing much better when it comes to margins, because the components required for the complete solution will also be manufactured in-house.
So Amit, good morning, Neeraj here. Just trying to get a sense of what could this mean. So let's assume, I'm just trying to understand, when does this take shape and form? When do you deliver? And some idea of how important this is. This is important. We heard you say this as well. But relative to the annual numbers that you clock in, how important could this be?
So this is our strategy of getting up the value chain. Now, when it comes to the size, if you see the journey of Paras Defense in the last 2 to 3 years, from optical components we have come to optical systems. And when we are looking at these optical systems to be manufactured, the value, say, if I'm doing a 100 rupee component, when I do a complete system, it is a 1,000 rupee system, where because the component along with its ancillary equipments like electronics and other mechanical systems, then the integration of that, the wiring, harnessing, and the whole thing, the whole testing, you build value not just with raw material, but you build value in the process. Now, when you build value in the process, the whole optimization of the process brings about the profitability of that particular system. Now, when I'm looking at this particular gun, today I'm doing a lot of control of this gun. I'm using this gun as a border defense system. Now, when I tomorrow go and manufacture the whole complete solution, I may look at the quantum jump into my order per system. So,
Amit, okay, let's assume that you cannot say by when will the numbers start trickling in. But do you believe, when you would have applied for a license because you would have believed you will get in some order inflow, right? Is there an expected order inflow that you anticipate in 2025 as a result of the fact that you've gotten this license?
I do not want to put it whether 2025 or no, but between 2025 and 2027, I am expecting orders in this.
How much? I mean, that's the question. I still don't have clarity on what does this win mean for you in terms of some numbers that you can share with us, some idea.
The quantum of my order per solution today, which is about 5 to 10 crores, will go to 100 to 150 crores.
But you expect some orders for these solutions. One is quantum, one is the number of orders that you will receive, right, for this thing. So you expect an X number of orders for the next 2 years, maybe?
Yes.
What is that X?
I am looking at the orders going in the range of delivery of anything between 30 to 50 systems.
Okay, and Amit, I'm not going to push you कि भाई order क्यों नहीं आया क्योंकि आपने बोला था 2025 में आ जाएगा. These things are fluid, but just wanted a sense of what this could mean. So thank you for that.
Yeah, all right. Thank you so much, Amit Mahajan, for speaking with us, Director at Paras Defense. And a pretty big development actually for Paras Defense, because from making components for light machine guns, now they have the official license to make the entire solution, as they say. So defense looking good, Paras Defense looking good this morning. Another big development, another space which is actually buzzing is oil and gas sector. BPCL has given an in-principle approval for an IPO of Maharashtra Natural Gas Limited, also known as MNGL, which is the reason you're seeing BPCL was buzzing in the morning. It's come off its highs right now, though. Let's get in Mihika with more details.
So, we actually have BPCL, IGL and GAIL India in focus. Now, this is the company that has gotten the in-principle approval is Maharashtra Natural Gas Limited, which is a joint venture between these three companies. And the approval is for roughly around 1,000 crore IPO. Now, in terms of the stake percentage in Maharashtra Natural Gas, Indraprastha Gas has 50% stake in the joint venture, Bharat Petroleum at 22.5% and GAIL India at 22.5%. And the Maharashtra state government holds a balance of 5%. In terms of what it does, well, it is the authorized city gas distributor for the city of Pune. And as per city research, there is value unlocking for the stocks, currently listed stocks. The listing of the joint venture will help unlock value for IGL and Maharashtra National Gas. Contribution in cities target for IGL stands at 45 rupees per share, which is a significant number. And the potential listing could also unlock value in GAIL's unlisted city gas distribution investment as per city.
Okay. Well, BPCL is one, but IGL is possibly, by virtue of that 50% stake, the principal beneficiary. So bear that in mind. Okay. So that's the newsy stuff. Let's get in. Rajesh Bhatia, he's Chief Investment Officer at ITI Management on the show. To try and understand how does he think about the landscape currently. Rajesh, great having you. Thanks for taking the time out. Rajesh, when we spoke midway through the year, you were relatively cautious on select aspects of the market. As we hit 2025, it does seem that the caution was well warranted. The question is it time to be even more cautious now? Because the overarching view on the street seems to be that it's a year for discipline and not a year for gains.
No, Neeraj, I would concur with that view that it is the year to lower your expectations of returns. We have done extremely well as a market over the last 4 years. In fact, even longer than that. We had a fantastic run from March 23 to September 24. 6 quarters of continuous rise in the market. The breadth of the market was excellent. It was really a fantastic bull market. Since then, we have seen some softening thanks to the slowdown in government expenditure. We all know that. And that has definitely hit the corporate results, corporate slowdown. And therefore, I think that's what is the continuation of that we are seeing. The risks have come from, apart from the slowdown in government expenditure, which has slowed the economy, has also come from the election of Trump as the president, because it brings a degree of uncertainty in the global environment, especially as it relates to what happens to the dollar, what happens to interest rates, what happens eventually to inflation and risk appetite and so on and so forth. So there is some uncertainty that has been brought about by the election of Trump. And I think what people are looking forward to is this rebound of government expenditure, which can ameliorate our slowdown or help our slowdown. Because if you look at our GDP components, C, consumption, plus G, which is government expenditure, I is investment, export minus import. What is working or what was working is really G. Consumption is slow, private investments, nothing much to talk about. It's good, but it's not going to drive your growth. Exports, we're in a global slowdown, so don't expect too much from there. So the government expenditure really was the one which was driving the GDP growth of the country. So for the moment, we are looking forward to the G bouncing back, and that's really where we are.
Mr. Bhatia, very good morning. Tamanna here, and glad to speak with you here on NDTV Profit. In terms of government expenditure, is that the only sort of missing brick, and is that going to be enough? I'm just wondering how you're seeing at corporate performance ahead of Q3. We're going to get into the thick of it. And are you penciling in or preparing for another disappointing quarter?
So I think you've had some previews come in from banks and some consumer companies. And of course, I think the primary reason why the market was down yesterday was not as much about the concern about the virus, but the fact that corporate results could again be a little anemic going into Q3. And I think people are still looking for visibility for when does the economy revive, because like I pointed out, they're looking forward to government spending. Now, with the rupee being where it is and global interest rates being where they are, the 10-year treasury in the US, it reduces monetary flexibility. You cannot reduce interest rates dramatically. To some extent, it may reduce even fiscal flexibility. So that is the challenge that we are kind of going through. Whatever, all said and done, it will take time to repair. Even if we have to kind of repair some of that slowdown, probably people will wait, or the governments also will wait, policymakers will wait for the Trump effect to kind of be known before they start pushing the pedal. So my sense is that even if there's not too much of a bad news regarding Trump, I think this slowdown will take some time to kind of work its way out. So that repair will take some time. And that's why I think you should keep your expectations from equities low, at least in the first half of the year.
First half of the year, keep your expectations from equities low. When you're looking at the equity basket, I'm just wondering, Mr. Bhatia, what is the kind of allocation that you see? Would you be taking some profits off the table, sitting on cash? And if you are looking at equity allocations, then to what extent are you looking at key sectors, and which key sectors are those?
I still believe that we are in a bull market. So this is really a consolidation in a bull market. So, and I don't know how much is the price-wise correction that can actually occur. Maybe there's a bit of a time-wise correction that happens in the equity markets. And of course, we have seen some part of that already. So I'm not sure whether you want to take a very, very aggressive cash call unless you're that type of an investor. For a long-term equity investor, I don't know if you need to take a very, very aggressive cash call. Keeping some cash is always helpful. But if you're a long-term investor, my sense is that, you stay invested, but keep your expectations low. Don't over speculate in this market, especially on the long side. So that is really where what I would think as to how you deal with this period of consolidation.
Rajesh, could the markets correct further? And by correct, I don't mean 1-2%, but significantly, simply because one, there is uncertainty. Two, if the earnings isn't the best. Three, if the budget has something around tax, a bit of an uncertainty there. There's also this new virus thing. And if the tariffs go up in the US, then it's inflationary and we might actually see rate hikes too. So while everybody's talking about when the markets will recover, I'm asking you the converse. We've corrected. Can we correct about 10% more? Or is that not the base case?
Well, not really the base case. Maybe, another 5-7% is, it can always happen. Because if you are saying that there's going to be a more than a 10% correction from here, what you're saying is that from the top, you will have a 20% plus kind of a correction, which is really a bear market. So I'm not sure whether we are going into a bear market unless there is change on the macroeconomic front. So that is where the uncertainty is. Do the macroeconomic variables change, dramatically? We have a very, very stable macro. So my sense is that anytime we have a bear market, those are usually caused by macroeconomic events where the stability becomes instability. We are not seeing anything at this moment which says that we are going into a macro unstable environment. Our macros are quite stable. So unless incrementally, this is just a valuation correction and a slowdown correction that we are seeing. And of course, we have an opportunity to kind of climb back up as soon as the government expenditure, etc., and is restored. And once we have greater clarity on what Trump will do. So that's really my base case. Unless macroeconomic variables change dramatically, I don't expect a bear market in India.
Okay, fair call. So that kind of correction not seen, but 5-7% from these levels not ruled out entirely. The other question is, Rajesh, do you reckon that there could be outliers on the upside? There is a lot of talk of how defense names will be in focus because orders will get bunched up in Q4 and there could be upsides there. There is talk of how pharma, despite not being in the Biosecure Act, could actually see a bit of an upswing by virtue of the fact that, if the initial signs of the US-China hostility is evident, is anything to go by, there's going to be a lot of China plus one in the next 4 years. And therefore, you look at all critical areas which might actually do that. So are there going to be telltale winners independent of what the markets or the headline indices do?
So Neeraj, you're absolutely right that this is going to be a little more stock-specific market. Look, the breadth that we saw between March 23 and September 24 that at least that breadth has narrowed. So, when you go into a correction, instead of seeing, in a bull market, you see a very wide breadth. But in a bear market, you're more likely to see, or a declining market, you're likely to see the breadth kind of narrow. But as far as difference in and pharmaceutical is concerned, I don't think the starting point of valuation at this moment is, compelling. Of course, the narratives are very good as far as pharma or defense is concerned, but I don't think that the stock prices are reflecting value at this moment. They're still slightly what I would call expensive stocks. So the narrative is multi-year, no doubt about it, but my sense is keep your expectations low.
Rajesh, I'm just wondering whether, going forward, what are the big factors or landmarks that you're seeing where you can see a turnaround? You've said earlier in this interview that hang in there for the first half of the year. What could change by the second half of the year in that sense? I'm just wondering where those silver linings are or where those positive triggers possibly are.
No, you raise an interesting question. One is, I think the market will want to see what are really the policies of Trump. And I think the 20th Jan event is a pretty significant one. So I think market will take some time to digest. And if it is not as fearsome as people predict, then I think definitely that could definitely help our cause. Second would be the budget. My sense is that this is a time where the government demonstrates whether it is favoring macro stability or whether it wants to go for growth. So if it really pushes the pedal on expenditure and tries to kind of revive the economy, that I think would be the second catalyst that the market would look for. And if both those events are favorable, in fact, yesterday there was a Washington Post article which said that Trump tariffs are not going to be as severe as expected. And of course, Trump has denied that news. But if that were to be the case, and then the Indian government starts spending and is focused on growth, those are two events that I think I would watch out for. And that will give me a clearer direction that now the bottom is made and the markets are ready to bounce back again.
Okay. Rajesh, the conundrum when I think of things is technology. Simply because while banking would be update-wise and the economy grows, you probably see banking come back. If it doesn't, then you see banking languish. Technology is a bit tricky in that the valuations are not necessarily mouth-watering. We're coming in a year wherein maybe budgets get finalized, but still a lot of chatter around AI-related business losses too. Who knows? If attrition was an issue 2 years ago, it's AI currently. Where are you on this argument of Indian IT services? Are they good to have in the portfolio? Are they avoids in the portfolio? What would be your stance if you are allowed to not necessarily match the index which you might have to as a mutual fund?
So the expectation from IT is that growth rates will actually start to accelerate. Accelerate. The reason for that is that people believe that what does Trump want to do? He wants to cut corporate tax rates. He wants to raise tariffs. He wants to deregulate businesses, and he wants to stop illegal immigration, right? Corporate tax cuts and deregulating businesses. In fact, I read somewhere that just the deregulation of businesses will mean $4 trillion of mergers and acquisitions. Now, that's definitely going to spur banks, apart from the corporate tax rates. Banks are a very large spender in the IT category. So the expectation is that if the US economy revives and in fact accelerates, because that's what Trump wants to do, then Indian IT companies, which 60 to 70% of their sales come from the US, are likely to benefit because that will now act as a tailwind. The improved economy of the US will act as a tailwind to Indian IT services companies. So the expectation is that will help accelerate the growth rates of Indian IT companies.
TCS taking it to the chin ahead of its results this morning, but look at the kind of recovery in the Bank Nifty. That's definitely something to take heart from. Thank you so much, Rajesh, for speaking with us. Rajesh Bhatia, Chief Investment Officer at ITI Asset Management, joining us today on Talking Point. We'll take a very short break, but coming up next is Ask Profit, where we get experts to answer all your queries. Stay tuned.
This is on my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is on my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit and my name is Alex Matthew. This show gets you actionable insight on all of your stock related questions. And to that end, if you've got questions for us, you can message us on that WhatsApp number or you can even call us, as so many of you have done over the last few weeks. It's been absolutely fascinating and fantastic to talk to each one of you that has called. The insights that we get from you are always something that we talk about even in the newsroom. So don't hesitate to pick up the phone and call us on that number. We'd love to speak to you. Let's take a look at where the markets are right now. And after a very torrid, very difficult start to the trading week, there is a little bit of relief on the screen. You have the Nifty 50 trading with gains of about 0.6% or so. There's been a bit of chop and churn, but we've recovered from the low point of the day, and that low point also in the green. So not
too much to speak of in terms of the declines, but of course, we're still a ways off from the 200-day moving average for the Nifty 50. That's certainly something to watch on the upside. Let's look at the broader markets as well, just to see how they're faring. And you have the mid-cap index with gains of about 0.8%, certain amount of ground being clawed back. The small cap index also gaining about 0.9% or thereabouts. So broadly, you're seeing some recovery from yesterday's sharp cuts that you saw, the cracks that you saw across the board. In terms of the sectoral performers, you have the Nifty oil and gas that is standing tall in trade, gaining about 2% or so. The energy index is up about 1.3%. Metals as a pack doing reasonably well, up about 1.3% or thereabouts. Pharma is up about 0.8%. I guess to a certain extent, some of the talking points overnight are carrying through in trade for us here in India as well. Globally, of course, equity markets have reacted to a source-based report that suggested that the Trump tariffs that everyone was worried about, maybe the aides of Donald Trump are looking at a diluted version. Of course, Donald Trump coming out on Truth Social and dismissing that report as untrue, but still you have equity markets around the world that have reacted positively to that, and the Indian equity markets are also reacting positively, as I said. Action in the primary market continues, of course, today, and you have a new listing that we should talk about, and that's Indo Farm Equipment. It was a 260 crore IPO. It was significantly oversubscribed. It was a mix of an offer for sale of 75.25 crore rupees and a fresh issue of 184.9 crore. If you missed that issue, and if you're wondering what the company does, it is a fully integrated manufacturer of tractors, pick and carry trains, as well as cranes rather, as well as farm equipment. So essentially a farm equipment company. We are joined by the management, Mr. R.S. Khandwalia, who is joining us, as well as Anshul Khandwalia. Thank you so much, gentlemen, for taking the time. I'll come to you, Mr. R.S. Khandwalia, first. Congratulations on a successful issue. And I'm sure that a lot of your new investors want to know how you're going to be utilizing the fresh issue proceeds.
Yeah, good morning, Alex. Yeah, this new, whatever we are raising this money, the first big money is going in the expansion of our crane capacity. We are putting a new facility in 30 acres of land nearby our existing facility, and the capacity will be increased to 306,000 crane per annum, additional to our existing capacity. So, and then further 45 crore will be investing in our NBFC company, which will support us for retail financing support in the tractor business, Baroda Finance, which is a 100% subsidiary of this company. And around 50 odd crore, we will be repaying our short-term loans.
Okay, so that gives
and balance is general corporate.
Yeah, that gives me some perspective. Thank you for that. I'm just curious about where you see the biggest leg of growth. Is it in the tractor space, or is it in the crane space where you are increasing capacity? Anshul, maybe you can give me some perspective on that, because a company like yours in the crane space especially would be, a lot of people would look at it as a barometer to how the industry as a whole is doing, right? So what are the kind of prospects in those two businesses?
Right, sir. So, there's no doubt in saying that our name is Indo Farm. We started as a tractor manufacturing company, but I think we're slowly pivoting and migrating towards a construction equipment company. Sir, with the government's current focus of making India a 10 trillion economy and the focus on infrastructure, we feel that we could see tremendous growth opportunities in the construction equipment sector. Hence, the organization is also setting up a new factory there. So we feel the construction equipment space is where our more focus will be in the coming future, sir.
Just a follow-up to that then, and at this juncture, we're just looking at the latest data from CMIE as well. Anshul, I'm guessing that you may have seen some of the headlines this morning. We're still seeing a little bit of a lull in capex, and we're still seeing a little bit of slowness in spending and expansion of capacity. Even though that number as a whole for India is above the average over the last 10 years, it's still lower by as much as 22% in the third quarter. So Are you seeing any signs of a pickup in the second half, and what does that mean for your own business?
So definitely, sir, see the first 2 quarters. So see, I'd like to answer this in 2 parts. Sir, Indofarm currently operates in a very small part of the country. We only cover about 20%. So moving forward, the remaining 80% of the country is the opportunity for us. So that is one part where, despite however the industry performs, we could see potential growth there to cover the rest of the industry. Also, sir, the first quarter of this year had the elections, and during election times, a lot of projects get held up. But now, I think in the last quarter, definitely there would be an increase in the infrastructure projects.
Mr. Khadwalia, one last question from our end to you, of course. Can you give us a trajectory heading into next year as to where you see top line growth? And of course, your new business, or rather I shouldn't say new business, your NBFC is geared towards increasing business in the tractor space. So certainly that is also going to bode well. And the rural space is seeing increasing demand is what we're seeing. So therefore, what is the perspective heading into FY26?
Yeah, there are 2 things. Once our NBFC is getting funding, that definitely it is going to support the tractor sales in a bigger way, because we are a growing company and we need the retail financing support is very essential for grow this business. Next is the capacity expansion of crane, because we are utilizing our almost 95% capacity. In our existing capacity, we are able to sell. There is no issue. Whatever we produce, we are able to sell in crane. And once the additional capacity is created, that we are expecting by the month of October, it will be start operationals around October. So 6 months we are going to benefit in the next financial year, and that the number increase. So definitely you can imagine the capacity we are creating 3,600. How much some capacity will be able to convert in sale. So it is a good number. And the capacity, the realization value of one crane will be plus 20 lakh rupees each crane. 3,600 crane is a big numbers. Once the capacity is created. And we, in the crane also, we have got only 20% area across the country. We got enough market. For us, market at this stage is not an issue.
No, certainly, and exciting times for both of you. Congratulations once again from us at NDTV Profit, and we look forward to speaking to you, gentlemen, over the course of the coming quarters, and certainly to get some perspective on the farm sector as a whole, as well as the prospects in the construction space. Thanks so much for taking the time. All right, let's also talk about this with our expert today. We've got Asta Jain joining in, and she looks at IPOs very closely. She's a senior research analyst at Hem Securities, and we've also got Swati Hotkar, AVP Technical Research at Nirmal Bang, joining in. Thank you so much, as always, ladies, for taking the time, and good morning to you. I'll come to you, Asta. Did you have coverage on Indo Farm equipment, and was it a subscribe rating? Would you say it's a buy even at this level? What are the prospects?
Hi, good morning to all of you. Yes, we did cover this IPO, and I had a subscribe rating both from the listing gain as well as long-term perspective. Now talking about this company is into the farm equipment manufacturing, and they have 2 decades of experience. But what is major focus point of this company, that through these IPO proceeds, they will be using it in their NBFC, Baroda Finance. I think that will be helping the company in expanding its dealer network and in turn the tractor sales. So that is a major focus point of the company, and what we believe that this company is well poised to show some more returns from here now. If I talk about the listing is as per expectation. We were expecting the listing anywhere between 25 to 30%, and the stock prices are really quoting at those levels. So those who have not received the allotment, they should not make entry at this point of a time. I think let the stock cool till the level of 250 to 60 and then make an entry into this counter. But those who already got the allotment, who are lucky enough, then they can wait for more upside. Maybe 300 or 305 are those levels where some profit booking is advisable for long-term investment horizon. But in the shorter term, if anyone has just applied for the listing gain, then partial profit booking at the current levels is also advisable, but only partial.
All right, that was the view for the Indo Farm equipment, the new listing in town. But now with that, let's move to the queries for today. The first query is from Karthik. He's holding about 110 shares of Zomato. This is at a price of 230. Wants to understand whether this is a good time to add more shares to it or not. Now, in this last 1 month, we've seen quite a bit of correction in terms of where Zomato was headed. And in fact, today there was a note also from Jefferies wherein they've downgraded the stock to a hold rating. Swati, let me come to you on this one. Zomato, we've seen quite a run up in 2024, but 2025 it started on a more of a sovereign note. So can you elaborate what's your view on Zomato?
First of all, good morning, all of you. My view on the Zomato is a little bit cautious. In this month, within the span of a 6 to 7 trading session, we have seen a 8% correction in this particular counter. Now, there is a cluster as a support levels nearby 230 levels. If it fails to respect that level, then more profit booking can be seen into this particular counter, which might take our stocks towards 200 and so level. Since the client's position is already bought at the 230 levels, I will not suggest to average it out at the current level. If you're getting any dips towards to 220, 200 levels between that trading zone, definitely one can go for a long position. At the current level, I believe the profit booking is likely to be extended and which might take a counter towards to 220, 200 levels. So try to wait and watch policy should be applied. Any corrections can be utilized to take a long position, but not at the current market price.
So hold off on fresh entries into the counter. The stock is down as much as 4% in trade today, possibly reacting to that note, that downgrade from Jefferies. Shweta is calling us. She's the first caller today. Shweta, good morning. You're calling us from Hyderabad. How can we help you today?
Hi, Alex. Good morning.
Good morning.
My question is, I want to take a fresh entry in IT stocks.
Okay.
I would like to know, is it the correct time to enter in any IT stocks? If yes, then I would like to know one from mid cap and one from large cap, with including the stop loss.
Okay. So, because you're mentioning a stop loss, I'm assuming that this is a short-term question. But have you identified what the time frame is that you want to keep on this trade?
My time frame is around 1 year. But as the market is so volatile nowadays, I would like to know the stop loss also.
Okay. So what you're saying is it's actually a fundamental reason why you're buying the IT stock, but you want to keep a stop loss. Is that right?